Hello, this is the tradesight market preview and economic roadmap for the week beginning February 4th, that's a Monday, ending February 8th, 2013. Hope you're having a good 2013 so far. This is a look at the markets from the perspective of stocks and futures. Here's the S&P index to start with. We were watching this index breakout a couple weeks ago, talked about how important and critical from a construction perspective that breakout is. We did get a 13 seeker sell signal right around the same time, and we talked back then about how interesting it was going to be to see whether the 4-month, 5-month pattern, which was very constructive, would win out over a 13 sell signal there. And again, we have a measurement on that sell signal, so at least we always know where to trap ourselves if we play the short side, which we didn't really. So here's a look at the move we got on that breakout, and you can see that we immediately broke that pink risk line. And we also talked even as recently as last weekend about when you break those lines, how so quickly, how they tend to lead to really big moves right afterwards. And as you can see so far, the S&P, after what was kind of a narrow week, to be honest, at least on Friday, finally got a spike up to new. So we're going to continue to watch this, but obviously the breakout there has led to a pretty decent move. And let's take a look at what that translates to over on the NDX index. It's the NASDAQ 100. And this had that floating island we were talking about last weekend. So far, that hasn't really led to anything. We never got any confirmation, though. That's the other thing. When you get the floating islands, it's the confirmation. So you get the day up, this is the island. The next day down, that makes the island, obviously. It's the confirmation is the break under that low. We never got that day. We do have a 13 sell signal in place here, and now after a flat session, flat week, we've gotten up on Friday to these new highs. We filled this gap. It'll be interesting here. I don't know. This isn't really a pattern like the S&P had. So if we rush up and break through this pink line, that's going to be another buy signal essentially on the market. But there's certainly a lot of overhead, and I wouldn't say the NDX is nearly as compelling. Another thing I wanted to point out is that if we take a look at the NASDAQ futures here, and I just want to focus on the last week or so here. Look at this. This is Friday, Thursday, Wednesday, Tuesday, Monday, Friday. Okay, so that's basically 2 weeks worth. There's your floating island up here. I think it's hilarious that there's a 13 sell signal on the 15 on the floating island, but that was the high right there. But either way, you take out that island. Look how much. This is why it was such a choppy month for trading futures. We basically had 2 weeks right in this range until we finally broke out here late Friday. So overall, you'd have to call the market bullish. There's a report up on the blog this weekend to talk about some of the recent economic data. The headline numbers on the unemployment to some people maybe looked negative. The headline numbers on gross domestic product for the fourth quarter to some people maybe looked negative. That came out last week. And yet we're still moving higher. A lot of people wondering why. So the article's up on the blog to talk about exactly what those numbers really meant, because they weren't nearly as bad in detail as they may have looked like on the surface. So that's a look at the futures. Let's take a look at just some of our other indices here. Here is the daily chart of the semiconductors. That's the stocks, obviously breaking out for the good news for the semiconductors in general. Going to watch this 425 area right here, because that's kind of the tipping point of this double bottom of this W formation. You break out there, you got a gap to fill above. It's all very bullish. Here's a look at the biotech index. And, you know, again, another one staging for a breakout. Not as perfect a formation, but that's a cup and handle. I mean, I had to tell you that everything we're looking at here looks very bullish in general. And as the old saying goes, banks and biotechs, as they go, so goes the market. But, again, I don't know that we're going to see anything. Well, I certainly don't see anything that suggests any negativity yet. Now, I mean, a lot of people looking for a pause and a rollover. I would not be concentrating on that if I were you. I would be focused on the fact that the markets are still in an uptrend and everything looks way more positive. You know, it's not our job to try to call tops and bottoms. Certain signals we get, we maybe hesitate and are aware of them, but you definitely trade with the trend. And if you've noticed the calls off the reports lately, I've had very few short calls, because how are you going to have short calls in a market that's been trending up and very constructive in general? Here's a look at the oil price futures. Again, a cup forming there. That could break out. We'll see how that goes. But again, when the market looks like this, you don't expect to get a lot of short ideas. I mean, stocks are not setting up for breakdowns. It doesn't mean you can't top and form a top at some point in time, and then you start to look at shorts and get more shorts as the market starts to head down and those downward constructive patterns form. But right now, we're just not seeing anything like that. So again, I think more of the trade calls are going to continue to be on the long side. until the market really gives us something, and it's not our job to try to guess when that's coming. Let's take a look at economic data coming out this week. And this is going to be a lighter week for data. We've had a lot of big data in the last week or two. We've had unemployment. We've had the Fed announcement this last week, a 2-day Fed meeting. We had the gross domestic product from Q4, the first look. That's a big number. We had all that type of stuff. So we'll see where that takes us for now. I don't know that we're going to get anything else out of it. But here's the factory orders number Monday morning. Okay. Not a big number for stocks, but it's there, 10 a.m. Eastern Time, 30 minutes into the stock market. Tuesday, ISM services, not a huge number either. Wednesday, we've got MBA mortgage index and crude oil inventories. Again, neither of those are huge. Initial and continuing jobless claims can be big, but we get that number every week. Productivity, not a big deal. Consumer credit, not a big deal. Trade balance Friday morning, that's the big one that the market's going to be focused on. We are also into February now, so if there was any end-of-month window dressing going on that contributed to the market being so flat part of this week, and you'll notice we were really flat from Monday, Tuesday, Wednesday, Thursday, and then Friday finally that spike up. So that's called window dressing. It can hold the market in place, doesn't hold it from going up or down. It could be either. In this case, it looks like the market finally shook loose and got those statements printed at the end of January, and now we're heading up for February. So we'll see how that rolls. But again, no major data this week until Friday here in the U.S. The trade balance number will be the number to focus on. Our roadmap suggests that Tuesday, Wednesday, and Thursdays are always the better trading days. They're the institutional days, and they're just wide open this week. So maybe we get that week finally where things can sort of get moving. We don't have a lot of earnings ahead. Stuff like that. So we'll be trading it as usual, but certainly for now with an upside bias. If the stocks and the biotechs break out, don't fight the market. We're heading that way. There's going to be a lot of strong moves to the upside. Those of you looking for a top, it might be a little premature still. Have a great trading week.